All right, so I'm going to go ahead. All right, so we're going to go ahead and get started. The first thing I will do, I usually share this webinar on Facebook, and I do a prize for, it's like a raffle, basically, for those that share the live stream. So I had 8 people to share it last time, but I could only see 5 of the names. So I had 8 shares, but I could only see 5 people's names. So if you're sharing in the future on Facebook, just try to remember to make it public so that in case we're not friends, I can see that you've shared it. That way you can be entered into the prize raffle. So what we're doing today, these are 5 individuals that shared last month's webinar: Ms. Kathy Hood, Ms. Gwen Roberts, Shara Russell, Keisha Johnson, and Mercedes Hightower. So I'm going to click, and whoever wins a $50 gift card. And shortly, I'm going to remember and figure out how to get us back over to Facebook. I can't recall how I was able to do that the last time. All right, so here's my spin. Let's see who wins. Gwen wins. Gwen wins everything. Oh, Gwen. Okay. Well, Gwen, I will be contacting you to give you your $50 gift card. I will be mailing it to you. And it will be a $50 gift card of your choice. So congratulations. All right. So we're going to go ahead and get started. I'm not sure why. Oh, you know what? Were y'all able to see that drawing? Were you able to see the raffle, Laura?
Oh, yeah.
Oh, okay.
I saw that.
Okay. All right. Perfect. All right. So I'm going to go ahead and get started here. Today, we're going to be talking about homeownership, and more specifically, a loan product that allows buyers to put no money down as far as a down payment. So we'll go into details regarding that. So thank you all for joining. Here's our agenda. We're going to, of course, welcome you, introduce ourselves. We're going to talk about the home buying process. Our lender, Ms. Laura Jolin, will be discussing the FHA 100% program. And if we have time, we'll go into credit and down payment assistance, which that's the whole premise of today's presentation. And so then we'll go into some questions. So just about who I am. I am an Atlanta native. My name is Kelly Adams, born and raised right here in Atlanta. I have a husband of 11 years, 2 boys that run me crazy, 10 and 6, and we have a lot of fun. Otherwise, I am very passionate about health and wellness, and I love music. My interest in real estate actually began in 2006. And I actually obtained my bachelor's undergraduate degree in real estate, which was not very common at the time. But that's when I initially, just got just engulfed in real estate. And then shortly after, if you're familiar with the market, it crashed. So I just decided to go and get a normal job. And I was working for 10 years as, what was I doing? I forgot, right? What was I doing for 10 years? I was actually recruiting students. I was a recruiter. And so that's what I did. I enjoy educating my buyers and my sellers. If you come on board with me, Laura knows this, everyone that I speak to, we're having a buyer consultation. We're talking about the nitty-gritty of what you're doing, why you're doing it, what's coming. It's never going to be a big question mark as to what's coming up. You're going to be familiar with a lot of things. So who on here is a first-time home buyer? You can either raise your hand, or you could, if you know how to do the little emoji thingy, you can do that. Okay, so Miss Victoria, she's a first-time home buyer. Great. Anybody else? I think Carlene will be.
I am, yes.
I can remember correctly. Okay. So if you don't mind just telling me a little bit, any of you, just why do you want to purchase a home? You can put it in a chat. You can unmute and talk. It's totally up to you. A lot of people are looking for ownership, a place to call home. We got something in the chat. Let's see. I'm ready to own my own space. You want to be a homeowner. Same thing, home ownership. You want to have ownership. You don't want to be renting anymore, right? You're ready to have something of your own. A lot of people are looking for stability. So, maybe you have little kids, or maybe you're just tired of moving because rent is going to go up in a month or two or a year or two. And each year you're having to move because of that. There's also the ability for investments and just having different streams of income. So just kind of keep that in mind. So some benefits of home ownership is we talked about stability, but there's also stability in cost. Most times you're going to have a fixed rate, which will mean your principal and interest, that particular payment would stay stagnant. The only thing that could move in your mortgage would likely be your homeowner's insurance, and that's only if you change it or maybe your policy fluctuates. And then even your property taxes. So that's kind of a catch-22 because we want our value to go up, but we don't want our property taxes to go up. So just kind of keep that in mind. Another benefit with home ownership is gaining equity, which is phenomenal. You hear about equity all the time. Equity works in your favor. Equity is essentially the difference between what you own, how much you owe on your property, and how much it's worth. So if you owe $300,000 on your property, but maybe it's worth $375,000, you have $75,000 worth of equity in your home. And the great thing about it is you don't have to sell your home to take advantage of the equity in your home. There's also tax benefits associated with home ownership, which is essentially writing off property taxes and the interest that you pay on your mortgage every single month. So stability, again, you want to stop moving, and you can use your home investments to fund other investment ventures. So we have some people that take equity out of their primary home to purchase an investment property or, to start a business that you've dreamt of. So just a number of things. So before we begin house hunting, here's a couple things that we'll need. We will need a pre-approval. We'll also need to know what you're looking for in your home so that we're not all over the place. I like to find out what you're looking for, specifications in your home, like the area, the number of bedrooms, baths, do you prefer garage? Do you not care? Do you prefer open concept? Do you need to have a fireplace? I have a guy looking right now that he will not look at a house if it doesn't have a gas fireplace. So, you're going to have your preferences. Also, you want to secure your upfront costs. And we're going to talk about what those upfront costs are. So with upfront costs, I know today we're talking about a 100% down payment program, which means you don't have a down payment, but there are still other costs associated with purchasing. And so, for instance, upfront costs would be your earnest money. This is like a deposit. This is letting the seller know that you're serious about purchasing a home. You're not just putting in an offer, you're actually backing it with typically 1% of the sales price of the home. So if you're buying a house and it's $250,000, your earnest money is likely going to be $2,500. The great thing about earnest money is that it comes back to you at closing. So, you'll receive a credit back at closing for that same amount of $2,500. Some individuals walk away with the money back, or it can be credited towards your down payment or your cash to close altogether. Also, we're going to have a home inspection. Home inspections are not mandatory, but they're highly, 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 highly recommended. They could run about $400 right now, and it really depends on the square footage of your home. So if your house is under 4,000 square feet, you can expect about $400, maybe $375 for your inspection. The inspection is specifically to just bring to your attention any defects in the property, because we're going to go and we're going to see a beautiful home. We're not on top of the roof. We're not in the attic. We're not, in crawl spaces or, under sinks, checking electricity. We're not doing those things. That's what the inspector is for. They will, in the long term, save you thousands of dollars. So think about home inspections, even if you buy new construction. Another upfront cost would be a home appraisal. So the difference between the inspection and the appraisal is the home appraisal is ordered by your lender, and that particular appraiser is coming out to give the value of the home, the market value of the home. So that's the difference. And appraisals are mandatory when you are borrowing money to pay for your home, okay? And home appraisals, they're going to be around $550 plus or minus, somewhere along in there. Any questions on upfront costs, earnest money, home inspections, home appraisals?
No.
Okay. Anybody else? Put it in the chat if you have any questions. Okay. So you found your house, right? We put in the offer. That's the first thing we're going to do. You're going to make sure you have access to your earnest money. Typically, your earnest money is going to be due within about 3 days of your offer being accepted. So if we're out house hunting this weekend, we put an offer in, your offer is accepted on Sunday today, then you'll have until Monday, Tuesday, Wednesday. You'll have until Wednesday, close of business, to submit your earnest money. That's typically how that goes. Okay. Once your offer is accepted, then we enter a period called due diligence. This is typically about 7 days. It can be longer, it can be less, just depending on how aggressive our offer is, but on average about 7 days. And so with this one, due diligence is just that. You're doing your due diligence to make sure that this is the house that you want. Okay. So with that being said, you're going to have your inspection during this time. I typically like to have it sooner rather than later. That way we have time to negotiate repairs. Now, here's the thing. All sellers are not prepared financially to make repairs if you're buying resale. A lot of times that's why they're selling their home. Maybe they need the cash, right? So in those instances, they may be willing to give you credits at the end of the sale. So, at closing, maybe they'll contribute towards your closing, or maybe they will pay a contractor directly at closing for whatever repairs that need to be made. So those are things that we would talk about. Those are things that we would negotiate. But for the most part, we're going to be asking for the sellers to make the necessary repairs on the property prior to closing. So during due diligence, that's when we're having the inspection. We're having that conversation with the seller to ensure that they're going to do those things for you. Aside from that, you want to remain in contact with your lender heavily at this point, because at this point, I mean, I was going to say my job is done, but it's not. It's like the hardest part of my job is done. I've helped you find your home. We've solidified it. We've gotten through due diligence. At this point, you're in contact with your lender. You're making sure you're getting your documents to them in a timely manner. They're going to need updated check stubs. They're going to need updated bank statements, things of that nature. And you want to get those things to them in a timely manner so that we can get your file cleared as soon as possible. So this is I'm actually I'll go over it briefly because I think Laura has one that she wants to go over too, and I don't want to confuse you guys. Laura, does your breakdown cover like closing costs and things?
No.
Okay.
No, it's just the first and second payment.
Okay. All right.
And how it's calculated.
Here's the forecast for tomorrow. Look for mostly sunny weather with a high of 71 degrees Fahrenheit.
All right. So this is just a quick overview. If you guys are on your phone or on your laptop, take a screenshot if you can. This is a good reference. So basically, this is an overview of what you can expect. All right. So it's just basically the numbers that go along with everything that I just went over with you. So say your home is $300,000. Earnest money is going to be $3,000. Home inspection, $400. Appraisal, $550 plus or minus. That means your upfront costs are $3,950 in this particular scenario. Okay. So that's money you want to make sure you have access to pretty much right away. Your down payment, if you're making a down payment, today we're going to be talking about no down payment, but in the event that you are in a position and you need to put down your down payment for whatever reason, be prepared for about 3.5% of the sales price. So if you're putting down 3.5% of $300,000, that's $10,500. And then you have closing costs that are associated with your loan. Closing costs are fees that you pay the attorney and the lender, specifically, and prepaid. So it could be, what is it? Homeowners insurance, property taxes up front, just a few months of those things. So closing costs encompass a lot, including HOA fees if your property is in an HOA community. So closing costs are usually around 3 or 4% of the sales price of the home as well. Here I have it estimated as $10,000. So if you're not using a down payment program, going through with a property that's $300,000, you should expect $10,500 for your down payment and closing costs around $10,000. So roughly about $20,500. Remember, earnest money comes back to you. So you see it at the bottom as a deduction. So $3,000 for earnest money comes back. And let's just say this seller was kind enough to give you $3,000 towards closing. Sellers are contributing now, which is great. They're not only doing repairs, but they're also contributing towards closing. On a property for $300,000, I feel like I could probably get you more than $3,000, but on here, I have $3,000, right? So that means your final cash to close, and this estimate would be $14,500. That's without a down payment. I mean, that's with your down payment, I'm sorry. Any questions here? All right, so if you have to pay your down payment, where can your down payment come from? It can come from your 401k. It can come from a gift from a family member. Of course, you can save and budget. And then you have good old down payment assistance, which is what we're going to talk about today. I talked about that already. All right, so I just skipped the one about down payment and closing cost, the difference, which I've already talked about. All right, so from start to finish, how long does it take to find a real estate agent? That is like, it could be a minute, someone could refer you, or you could just be interviewing. It's totally up to you, but it could take a day or it could take a couple to a few weeks. Also, how long does it take for an appraisal? I'm sorry, for your mortgage to get approved? It's 2 weeks on average if you're able to get your documents in. So you start with the pre-approval, but once your file actually gets submitted, once we have a contract, it takes about 2 weeks to get it through underwriting and things like that. When you're going out on showings, how long does showings take? On here, I have 30 minutes to an hour, maybe 15 minutes to 30 minutes. Sometimes we won't even go into a property, and it just really depends on the area, because sometimes you're looking at you're looking at photos online, and you swear this is the house. And then we get there, and it looks like crap. It happens. So we just, go on to the next. How long does it take for an offer to be accepted? Typically 1 to 3 business days, okay? If we're lucky, it gets accepted the same day, most times 24 hours, give or take. Inspections take about 2 hours to complete. So you can go to your home inspection. You don't have to, but you do have an opportunity to go if that's what you like. But on average, it takes about 2 hours unless the home is really big. Appraisals take a little bit longer, maybe a week or 2, because they have a little bit more reports to run. And on average, it takes about 30 days to close a mortgage. Using down payment assistance, it could be about 45 days. All right, so here's some buyer do's and don'ts. You want to know your credit score. You want to shop your lenders. You want to understand the home buying process, and you want to work with a skilled agent. Buyers don'ts. You do not want to change jobs. You do not want to buy a new car. You do not want to co-sign for anyone. You don't even want to apply for any new credit at all. not while you're going through the home buying process. The day you close and you sign and you get your keys, after that, you can go and apply for Rooms to Go, Home Depot, you name it, but get your house first. It just opens up a can of worms with underwriting. So any questions there? That's the home buying process in a nutshell. Anything? All right, otherwise, Laura, the floor is yours. Ms. Laura Jolin and we've been working together for like 4 years, and she is my go-to for everything. She's always available. She is very knowledgeable and very reliable. So a lot of times if you call me, I'm going to refer you to her because she is going to make sure that she gets you taken care of, okay? It may not be immediate, but she's going to tell you exactly what you'll need to do to get to the closing table, all right? So Laura, do you want me to share your document?
Sure.
Let me stop sharing mine. And let me find this other one. Any questions for anybody so far, the home buying process?
Yes, I have a question, Kelly. So if we're using the process of no down payment, will you in turn have a longer mortgage to deal with instead of a 30-year mortgage? You'll be a longer mortgage and more?
He's about to go over there right now.
Okay.
Yeah, that's a great question. And here you go. Hold on one second.
There it is.
Let me see. Can I zoom in? Can y'all see it?
Yes.
Okay.
Excuse me. Hi, everybody. My name is Laura Jolin, and I'm with Cross Country Mortgage. I've been in this business about 40 years now. So I've done it all, seen it all. It's been a ride. This one particular program that I'm going to talk to you about this one is fairly new. It's 100% FHA financing. So rather than take the 3.5% out of pocket, we turn that into a second mortgage. That second mortgage is amortized over a 10-year period. So your payment is low on that. Kelly, I think it's funny we use the same loan amount, 300,000.
Oh, yeah.
It's just kind of average.
That's
yeah.
good.
So 300,000, 3.5% of that is 10,500. This becomes the second mortgage. Your first mortgage, which is the base amount, it's 96.5%. That totals 289,500. To that, FHA requires the upfront mortgage insurance premium, which is the MIP. So that's 1 3/4, and that's financed into the loan, which would give you a total loan amount, first mortgage amount of $294,566. The 3.5% of 10,500 becomes the second mortgage. Both of these are fixed rates. The first is fixed for 30 years. The second is fixed for 10 years. Now, there's no prepayment penalty on these. You know, if you want to pay it off early, you want to make extra payments, you win the lottery, you can just pay it off. Now, as far as payments are concerned, I did these payments on an average interest rate of 7%. Under this particular program, the interest rate tends to be a little bit higher because we're looking at 100% loan. So the first mortgage payment would be $1,959.75. The second mortgage would be $121.91. So as you can see, it's very low, amortized over a 10-year period. I estimated the property taxes and insurance, which of course is included in the loan, along with the monthly mortgage insurance, that's specifically for FHA. So under this scenario, your monthly payment would be $2,556.66. Now, in answer to that question, if you use down payment assistance, will the mortgage be longer than 30 years? No. Now, there are 40-year mortgages in place, you know, if you wanted to go that route, but typically it's a 30-year loan. Do you have any questions on this program?
Yes, so the traditional home buying opposed to the FHA and doing a no down payment opposed to doing a down payment, you would think the down payment would be better or more beneficial for a buyer
It depends on the buyer.
Okay.
You know, do they have money? Can they get a gift? Do they need this down payment assistance? And we have several different down payment assistance programs, but this particularly was the one that we were going to discuss today. Now, some people have, for example, 10,500 in excuse me, in either checking, savings, IRA, 401k, something along those lines. But a lot of people don't. Money's a little tight these days for a lot of people. So this comes in handy. Now, again, I did this with an average interest rate of 7%. What can happen if interest rates drop, and they will at some point, of course, we don't know exactly when that's going to happen, but it will. This can be refinanced. You can turn around and refinance the first and the second into one loan. And there's no penalty for doing that.
Okay. And what should your credit score be at a no down payment?
On this particular program, it's a minimum credit score of 600.
Okay.
And we always use the middle score. Of the three, we have to take the middle. So it has to be a 600 minimum credit score.
Okay.
But again, you know, the higher the credit score, everything today is credit score based or credit score driven. So the higher the credit score, the better the rate, the better the program.
Okay.
Any other questions?
Not for me.
Okay. What we are telling people now, and have been for a while now, everybody, and it really doesn't matter what the rate is, people will still buy homes. And what we tell them is buy now, refinance later. But it gets you in the house. And once rates do stabilize, then you can refinance. And we do offer a program in conjunction with all our other programs, buy now, refinance later, and you get a $1,500 credit towards closing costs.
Laura, talk about some of the documents that they'll need to get qualified.
Okay, standard documentation. For example, if you are a W-2 employee, we have to verify 2 years of employment. So we would need 2 years of W-2s, 1 month of recent pay stubs, 1 month recent bank account statement, all accounts, all pages, but we only need 1 month. Copy of your driver's license, social security card. If you're a resident alien, then we would need your green card front and back, that type of thing. Once you find a home, we need to know who your homeowner's insurance is going to be with. If you're self-employed, or if you're a 1099 employee, then we would also require 2 years of personal federal tax returns. If you're incorporated, we would require 2 years of corporate returns as well. So essentially, it's just pay stubs, 1 month bank statements, well, 1 month of pay stubs, 1 month of bank statements, 2 years of W-2s, and your identification. If you get child support, and it's court ordered, we would need to see, you know, that as well. And everyone is different. All the loan programs are different. Some require a bit more, some require less. It just depends. It depends on the borrower. Everybody's different. But that's the basic.
Okay.
And if you do have a co-signer, I'm assuming, is it the same documentation for the co-signer as well?
Yes,
Okay.
yes. Now, as far as a cosigner, let me just clarify that a little bit. There are, well, occupying co-borrowers or non-occupying co-borrowers, like someone's just co-signing for you using their income to get you into the property. A non-occupying co-borrower under an FHA program has to be a relative. It could be mom, dad, grandma, grandpa, aunt, uncle, brother, sister, stepbrother, stepsister. There can be no cousins. It's got to be, you know, a close relative. Daughter, son. But
Okay.
yes, it would require the same documentation along with the same credit requirements.
Got it.
All right. Does everyone on here keep track of their credit scores?
Yes.
Okay. What are some ways that you keep track of it?
I do Credit Karma, and I'm about to send out for a credit report because I know you get one for the year, free one.
Mhm.
So I'm in process right now to send out for a credit report to see exactly. Because I know Credit Karma isn't, you know, too accurate, but
You said it is or it isn't?
it's not.
Yeah.
Yeah. And there are several online sites, you know, Credit Karma, Credit Wise, Credit Sesame, Identity IQ, Experian, whatever you can get from your credit card through whatever bank you go through. Those are all consumer scores. And consumer scores are used if you're going to finance a car, furniture, open a credit card, something along those lines. Mortgage reports are scored completely different.
Hmm.
So that's good. That's a good segue. What I like to, Carlene, you touched on something really good, which is the free credit report. With those, that just shows you like what's being reported. It's very, it's usually not common for them to have like your scores on there, but you're gonna see like what's being reported to each bureau. Two that I like, one that I like is just, it's costly. It's like $39 a month, basically $40. I think it's $39.95 a month, which is My FICO. They have an app and you could go on their website. But they have the scores specifically for mortgage. If you're looking for, you know, to purchase a car, you know, whatever it is, whatever one they look at, you know, depending on what you're trying to purchase is what they have. So that one's really, really good. And it's really accurate to what the lenders are pulling up. So if you join late, just know that all three bureau credit scores will be pulled. And then the middle score, it would be used to, you know, get you qualified for your home. So for example, if you know, you're speaking with Laura, she pulls your credit, maybe you have a 659, 620, and a 619, they're going to take the 620 because it's the score right in the middle. Okay. Another one that I use that I really like is Credit Check Total. They're, I think, $29.95 a month, but they have like this trial for 7 days where you can pay $1 and get all three of your credit scores as well as the reports. What I do is I just sign up and then I cancel. So there's something that you could do, but you just have to remember to cancel within those 7 days.
Let me
Okay.
just touch base real quick on the credit report.
Mhm.
What I normally do now, a lot of lenders will do a hard pull, and that puts a hit on your credit.
Yeah.
When I talk to you for the very first time, well, until you write a contract, I
Yeah.
do a soft pull. It has no effect whatsoever on your credit scores. And I don't do a hard pull until you're locked into a contract, because they're only good for 90 days.
That's good.
And there's no telling how long it's going to take, to find the home of your dreams.
Yeah. Yeah. And that's a great point. So as like Laura said, so she has the ability to pull your credit, a soft pull on your credit, which does not impact your credit, which is great. So if you're in a standpoint where you're like, I'm not sure if I qualify, I'm not even sure what my credit scores are. Maybe you use Credit Karma and you're not sure. Laura would be a great resource because she can pull without it, even, it won't even show on your credit. You won't be dinged for it. But she'll let you know. She's great at saying, hey, if you pay this credit card down by $200, or if you pay this one to X amount, your credit scores will be this, because they have a predictable something. What do you call it? Wayfinder, that lets her know what your potential credit scores are and how to tap into that. So what exactly you'll need to do. And sometimes it's minimal. A lot of times you guys, you think you have to pay something all the way down and you don't. You think you have to pay it all the way off and you don't. And some of the things that may be on your credit that you think will impact you negatively won't. So it will be great to just speak with Laura. I do have her contact information at the end. So you could screenshot that and just contact her and ask her, questions that you have. She's a great, great, great resource and wealth of knowledge. 580 is the minimum credit score, I think, that most lenders look for. 640 is kind of like that sweet spot where most down payment assistance programs are looking for. And also typically you get better rates at that you used to. I don't know if that's still the case. And then 680 is kind of like that top tier. 680 or more is kind of like that top tier. So we talked about 100% financing already. Down payment assistance program. So outside of this 100% program that Laura talked about, there are other down payment assistance programs like Georgia Dream. If you're in Cobb County, there are some Cobb County down payment assistance programs. City of Atlanta has one. There's another, I don't know, I still have it on here, but I haven't done a Chenoa loan since probably 2020. So I don't even know if they're still out there.
Yes, they are.
They are. Okay. Here's the thing about these down payment assistance programs. A lot of times you're going to get the money, but a lot of times you have to do something like, for instance, the City of Atlanta, you have to stay in that property for 10 years. It has to be located in the City of Atlanta, and you have to stay in it for 10 years before it's forgiven. Otherwise, if you move or you sell your home prior to those 10 years, you pay those funds back with the sale of your property. That's the same thing for Georgia Dream. It never expires. So whatever your down payment is that they give you, whenever you sell your home, even if it's 20 years down the line, you're going to pay Georgia Dream back. So that's something that a lot of people don't talk about when you hear about down payment assistance program. Victoria says, are the other bullet points applicable to other states? Which bullet points? This one, or the?
Sorry. Yeah, so I don't live in Georgia. I live in Indiana. And so I was curious if the other, or maybe I'm reading this wrong, that the other bullet points were assistance, down payment assistance requirements. So I didn't know if it was only applicable to Georgia or.
Yeah, that's all I'm familiar with, because I'm only
Okay.
licensed in Georgia. And so these are specific to Georgia, like Cobb County, City of Atlanta, Georgia Dream. These are all specific to Georgia. Now, the requirements, it could be like, they could have a different type of, maybe Indiana Dream, I don't know, or some other types of down payment assistance programs, but I don't know how universal the credit score minimum is or anything like that for another state, unfortunately. Your best bet may be to kind of maybe reach out to a local agent. I do have a lender, not a lender, a referral realtor that I could connect you with, that maybe she's, more resourceful to know exactly what those requirements would be and what types of programs you guys have locally. But this is what I know for the state of Georgia.
Okay, thank you.
You're welcome. Some of them are going to have maximum purchase prices as well. So I know, like with Georgia Dream, I think the max is 350,000. I think the city of Atlanta, Laura, we were looking at, I think it was 330 or something.
Yes, roughly, yeah.
So you have
330.
there's stipulations. Also, there's maximum income limits. So if you make over a certain amount of money, you may not qualify. And it also depends on the number of individuals that's in the home as well. So there's a lot of things to kind of look at. You think, down payment assistance, you think, okay, great. But there's a lot of other things like, purchase price and your income and whether or not you make too much. Also, it does take a little bit longer to close down payment assistance programs. I put 45 days on here, but to be honest, any down payment assistance program that I've closed, it's been about 60 days. One even took 90. And the reason being is there are so many different layers to just approvals. It's not just the generic lender approval. You then have to take that lender approval and take that entire file over to the down payment assistance. And Lord knows how long it'll take for their underwriters to get through it. So that's the thing. So we talked about the 100% FHA program, but if you're up to living outside of the skirts of 285 in Georgia, we have USDA and Victoria. Yeah, this might apply to you guys as well. I'm sure USDA is throughout the United States, right? So there could be like little pockets of rural areas in Indiana. I know we have them in Georgia, which is kind of like, Paulding, Carroll County, Henry, what are some other ones? Conyers, Covington, Hampton, just to give you an idea, kind of, on the outskirts. But it's 100% financing. So it's a 100% loan, which means you don't have a down payment with that one as well. So USDA is really good for that. And it's pretty comparable to the same requirements like an FHA loan, right, Laura?
Exactly, but you do need tax returns with that program.
Okay, sorry.
And they
So
count
good to know.
all household income, not just the borrower's income.
All household people's income. Okay.
Right, husband, or if grandma's living with you and she gets Social Security, they're gonna count all of that. So you're not over the household income requirements.
Okay. So there are household income requirements with USDA as well. This is the little property map here. So there's an eligibility map that I'm going to email all you guys probably tomorrow when I resend this link in case you want to rewatch this particular webinar. But I'll include this website here. You can actually, if you're already looking for homes and you're like, I think this house is in a rural area, let me just plop this address in and see if it qualifies. You can do that. You just plop the address in there and it'll highlight green. It'll say the property is eligible, or it'll highlight red and it'll say it's not eligible. So it's really easy to use. But again, it's USDA, 100%. What's the minimum credit score?
We'll go 580.
Okay, so 580 is the minimum.
With an approval. But now, you mentioned rural areas, and a lot of people think rural, they're in Cowtown.
Yeah.
But under USDA, you don't have to be in Cowtown. You just can't be downtown.
Yeah.
Can't be within city limits.
Okay. So you'll be surprised. I've seen some homes that have really shocked me that were USDA eligible. So plop it in there. You never know. Now, there are ways to buy your interest rate down as well. So sometimes if you're getting, closing costs from the seller, if you're getting maybe 10 or 12,000 and you don't need all of it towards closing yourself, you can use those funds to buy your rate down to get you a lower interest rate. So talk to your lenders about that. You can also negotiate lower sales prices. So although you're looking and Zillow has the house listed for 380 and maybe your approval is for 370 or 365 and the house has been on the market for 28 days, we might can go in and, get it for you at your price point. So never think that you're ruled out just simply because of the price of the property. If it's been on the market a little while, there's not a lot of eyes on it, you never know. Prices are dropping, little by little. So just kind of keep that in mind. New construction is another option. New construction, it usually takes a little while for them. 6 to 8 months typically, just depends on the weather and, how lucky we are with, materials being shipped in and things like that. They do have great incentives sometimes, paid closing costs, upgrades, garage door openers. Sometimes if you catch the home in the early enough stage, you do have the ability to pick some things out, like your floors, your cabinets, countertops, things like that. And I always joke with my clients because you'll be the first person using the toilet, right? So it won't be a used toilet that you have. So a couple of things I always like to mention is that property taxes and homeowners insurance are usually included into your mortgage payment. So a lot of times when you think, let's say your mortgage is $2,500, maybe $750 of it goes towards your property taxes and your insurance. Maybe the remaining balance goes towards your your principal and interest. So most lenders set that up. I've yet to have a closing where lenders didn't set up an escrow account to where your property taxes and your homeowner's insurance is being paid every month. What happens is your lender collects those fees every month. And then let's say you purchase a home in Cobb County and, Cobb County in November or October, whenever they send those bills out, they'll send you a bill and then they'll send a bill to your lender and they say, hey, Danielle's property taxes are, $2,500 this year. They will use those funds that you've been paying into every month out of your escrow. They'll send them a check. Same goes with your homeowner's insurance. Maybe, when your homeowner's policy comes due, Carlene, maybe you're with Allstate, for your homeowner's insurance and, you get a bill, your lender gets a bill as well, and then they mail in your check. So they're using the funds that you're paying from for your mortgage in your escrow to pay that annually. Homeowners associations, HOAs, catch-22 with those too. I love the structure of an HOA. I love coming into a beautified, subdivision and, just having unity and just nice and cleanliness. But I don't like paying my HOA. But, what do you do? But so HOAs are great because it does create some structure for your community. You don't have Bill next door that could, paint their house pastel pink, or they can't have, a broke down vehicle or broken garage. So it just keeps the community up and, helps your value over time. But homeowners associations are typically on average it depends. If you go townhome community, they could be a little pricey. Obviously it depends on the amenities that comes with your community as well. But on average, they're about $500 or $600 a year. Unless, you're in a gated community, maybe you have a gate attendant, it's going to be a little bit pricier. So just kind of be mindful of that, because with your homeowners association, if your community is in one, your lender does have to take that into consideration as well when qualifying you for your property. All right. And any questions?
I have one. Going back to your what do you call that? A secondary person, if you're your co-signer, going back to your co-signer, credit score wise, if you're the primary owner person buying the property, right? And your co-signer credit score is better than yours, is it a factor, or does it help, or does it,
That definitely helps. Sometimes that can be the driving force.
Okay.
Now, if it's lower, that's going to be an issue.
Yeah. So what if it's higher, what help, in what way does that help?
We have a program, it's called Desktop Underwriter, and it's an automated system to run the loan through. You'll get an approve eligible, or thank you, Kelly. I just saw that. We'll get an approve eligible or we'll get a refer eligible. So let me give you an example. Say you have this, just an example. Say you have a 580 credit score, which is the lowest that we can go. That is, they drop dead minimum. But your co-borrower or co-signer, be it occupied or non-occupying, they have a 750. And you have, a little money in the bank, that type of thing. That could be a driving factor getting the approve eligible because that credit score is so much higher.
Okay.
Does that make sense?
Yes, yes. Mm-hmm. Absolutely. Okay.
All right, so everyone that's on, take a screenshot here. I did update Laura's, I had her information on there, but I had her name wrong. So definitely contact Laura if you have any questions or concerns.
Feel free to give me a call. I'm available evenings. I'm also available on the weekends.
Yes, she is.
But if you don't get me right away, because I'm always on the phone, just leave me a voicemail. I will call you back. That's a pet peeve of mine. You'll always hear back from me.
Okay.
Right. Any other questions that we covered that we didn't cover? I will be sending out a what is it? A survey tomorrow just to get some feedback to see if there's anything additional we should add. If you have questions, please let us know. If you want to stay back and talk to Laura or I, or either one of us, definitely feel free to stay back. But you are all free to go. Thank you so much for popping on. I hope that you learned something or some things that you can take with you on this journey to homeownership.
And just remember, there are so many ins and outs to the mortgage world. And there's just so many different things that we can do to make it work.
Yeah.
Okay.
All we need is a will.
That's right. We'll find a way.
Yep.
Thank you very much, guys. It was very informative. And
Awesome.
Kelly, I'll definitely be speaking with you soon.
Okay. Nice.
All right.
I look forward to hearing from you.
Okay.
Thank you all.
Bye.
Thank you.
Okay. That was informative.
I usually share this to Facebook, Laura, and I could not do it. I don't